Warren Buffett is a famous investor, widely regarded as one of the most successful and influential figures in the world of finance. His investment strategies and business acumen have earned him the nickname, the Oracle of Omaha, a testament to his unparalleled ability to predict market trends and make profitable decisions. Many call him the Oracle of Omaha, not just because of his financial prowess, but also due to his deep roots in Omaha, Nebraska. This city has been both his home and the headquarters of his conglomerate, Berkshire Hathaway. He is known for his smart investment choices, which often involve meticulous research and a deep understanding of the companies he invests in. Buffett's approach is methodical and patient, focusing on long-term gains rather than short-term profits. Buffett was born in Omaha, Nebraska, on August 30, 1930. This Midwestern city, known for its friendly people and strong community values, played a significant role in shaping Buffett's character and work ethic. He started investing as a young boy, showing an early interest in the stock market. By the age of 11, he had already bought his first stock, demonstrating a precocious understanding of finance and a keen interest in the world of investing. He bought his first stock when he was just 11 years old. This early start gave him a significant advantage, allowing him to accumulate knowledge and experience over many decades. Buffett learned about investing from Benjamin Graham, a renowned economist and professional investor. Graham's teachings had a profound impact on Buffett, particularly his principles of value investing. Graham was a famous investor and author, best known for his book, The Intelligent Investor, which is considered a classic in the field of investment literature. This book laid the foundation for Buffett's investment philosophy. Buffett studied at Columbia Business School under Graham's guidance. This period was crucial in shaping his approach to investing, as he absorbed Graham's teachings and began to develop his own strategies. This experience shaped his investment philosophy, emphasizing the importance of thorough research, patience, and a focus on intrinsic value. Buffett's time at Columbia was a formative period that set the stage for his future success. Buffett believes in value investing, a strategy that involves identifying undervalued companies with strong fundamentals. This approach requires a deep understanding of a company's financial health and long-term prospects. This means finding good companies that are undervalued by the market. Buffett looks for businesses with solid earnings, strong management, and a competitive edge that can sustain their success over time. He looks for companies with strong earnings and a competitive edge. These companies often have a unique product or service, a loyal customer base, and the ability to adapt to changing market conditions. Buffett is patient and holds his investments for the long term. He believes that the true value of a company will eventually be recognized by the market, and he is willing to wait for that recognition, often holding stocks for decades. Value investing is like shopping for bargains. Just like a savvy shopper hunts for the best deals, a value investor searches for stocks that are undervalued by the market. The goal is to find high-quality items at a fraction of their true worth. Imagine you want to buy a new coat. You wouldn't just buy the first one you see, right? You'd probably look around, compare prices, and check the quality. You want to make sure you're getting the best deal for your money. You find a store selling a high-quality coat at a discounted price. This coat is made of durable materials, has a timeless design, and fits you perfectly. It's exactly what you were looking for, but at a price much lower than you expected. This coat is a great value. You feel like you've hit the jackpot because you've found something that offers more value than what you paid for it. This is the essence of value investing. That's what Buffett does with stocks. He looks for companies that are fundamentally strong but are trading at prices lower than their intrinsic value. This means the market hasn't fully recognized their potential yet. He looks for companies that are like that discounted coat. These companies have solid business models, strong management teams, and a history of profitability. Yet, for some reason, their stock prices are lower than what they should be. They are good companies, but their stock price is lower than it should be. This could be due to temporary issues, market overreactions, or simply because they are not in the spotlight. Buffett sees these as opportunities to buy quality at a discount. He believes in understanding the businesses he invests in. This means doing thorough research and analysis. He doesn't just look at the stock price. He digs deeper to understand the company's operations, competitive advantages, and future prospects. He reads a lot about companies. This includes annual reports, financial statements, and industry analyses. He wants to get a complete picture of the company's health and potential for growth. He studies their financial statements. This helps him understand the company's revenue streams, expenses, and profitability. He looks for signs of financial strength and stability. He wants to know how they make money and if they will be successful in the future. By understanding the business inside and out, Buffett can make informed decisions and invest with confidence, much like a shopper who knows they've found the best deal. Buffett is known for his patience. He has often been quoted saying that the stock market is a device for transferring money from the impatient to the patient. This philosophy has guided his investment strategy for decades. He doesn't buy and sell stocks quickly. Instead, he meticulously analyzes companies, looking for those with strong fundamentals and a competitive edge. Once he identifies a promising company, he invests with the intention of holding on to it for the long haul. He holds his investments for a long time, sometimes for decades. This long-term perspective allows him to ride out the market's ups and downs, focusing on the overall growth trajectory rather than short-term volatility. He believes that good companies will grow in value over time. By investing in businesses with solid management and a clear vision for the future, Buffett ensures that his investments have the potential to appreciate significantly as the companies expand and succeed. He compares investing to planting a tree. Just as a tree needs time to grow and bear fruit, investments require patience and nurturing to reach their full potential. You plant a seed and wait for it to grow. This analogy highlights the importance of giving investments the time they need to mature, rather than expecting immediate returns. You don't dig it up every day to see if it's growing faster. Constantly checking on investments can lead to impulsive decisions and unnecessary stress. Instead, Buffett advises to trust the process and allow time to work its magic. You give it time, and eventually, it becomes a strong tree. This strong tree symbolizes a well-nurtured investment that has grown steadily over the years, providing shade and fruit in abundance. This long-term approach has made him very successful. Buffett's patience and disciplined investment strategy have earned him a reputation as one of the greatest investors of all time. He doesn't worry about short-term market fluctuations. Instead, he remains calm and composed, understanding that the market's temporary swings are just part of the journey. He focuses on the long-term potential of his investments. By keeping his eye on the bigger picture, Buffett ensures that his portfolio remains robust and resilient, capable of weathering any storm and thriving in the long run. Buffett has made many famous investments over the years. He bought shares of Coca-Cola in the late 1980s. He saw that Coca-Cola was a strong brand with a global reach. He also bought See's Candies, a popular chocolate company. He loved the company's products and its loyal customer base. These investments have paid off tremendously for Buffett and his company, Berkshire Hathaway. These investments show his belief in the American economy. He invests in companies that he understands and believes will continue to be successful. Mistakes happen even to Warren. Even though Buffett is a brilliant investor, he has made some mistakes. He admits that not all of his investments have been successful. He once said, "The most important thing to do when you find yourself in a hole is to stop digging." He learned from his mistakes and used them to improve his investment strategy. He emphasizes the importance of learning from mistakes. He believes that failures can teach valuable lessons. He encourages investors to analyze their mistakes. By understanding what went wrong, investors can avoid repeating the same errors. Buffett's investment philosophy has inspired millions of people around the world. He is known for his simple yet powerful advice. He encourages investors to be patient, disciplined, and to think for themselves. He believes that anyone can learn to invest wisely. He encourages people to read books, attend seminars, and educate themselves about finance. He stresses the importance of financial literacy for everyone. He is a strong advocate for ethical business practices. He believes that companies should operate with integrity and transparency. What can we learn from Warren Buffett? First, invest in what you understand. Don't buy a stock just because everyone else is doing it. Second, be patient. Don't expect to get rich quickly. Good things take time. Third, don't be afraid to be different. Buffett doesn't follow the crowd. He thinks for himself and makes his own decisions. He encourages investors to be contrarian when necessary. This means going against the prevailing market sentiment. Finally, remember that investing is a marathon, not a sprint. Slow and steady wins the race. Buffett is a voracious reader. He spends hours every day reading books, newspapers, and financial reports. He believes that knowledge is the key to successful investing. He encourages everyone to make learning a lifelong habit. The more you know, the better equipped you'll be to make informed decisions about your money. He stresses the importance of independent thinking. He believes that investors should not blindly follow financial gurus. He encourages investors to develop their own investment strategies. Warren Buffett's story is an inspiration to us all. He shows us that with hard work, patience, and a commitment to learning, we can achieve our financial goals. He emphasizes the importance of giving back to society. Remember, the most important investment you can make is in yourself, so keep learning, keep growing, and never stop investing in your future. Please like, share, subscribe, and leave a comment.